Yo, dude, what? How'd you find this video? I've been secretly posting these videos to my OnlyFans. I don't really have an OnlyFans. What's up, dude? Or chick? What do you call? What's the female version of dude? Lady? No. Anyway, all right. Look, I just tried to record this video and I had an epic fail. Okay, so I'm doing it again. I'm gonna be a little bit more brief this time, I guess. But I posted on Twitter saying that I was gonna do this, so I am now doing it. And basically, what I was gonna do was I was gonna give an example. If you guys are familiar with Lou versus Wall Street, he's got this friend named Blue Ice who, on a Twitter space this past weekend, was saying that he was going to sell his AMC shares in order to play other plays and potentially bring money back to to get back in AMC when AMC is ready to move, type thing. And I mean, my take on it, like, by the way, like, I don't have a problem with anybody selling or buying or holding anything. Everybody should have the right to do whatever they want. If you want to buy things at their absolute top and then sell them at their absolute bottom, that's completely your prerogative. I just kind of disagreed with, like, the strategy, I suppose, because it just seemed like, like, this guy's kind of an influencer. His name's Blue Ice on Twitter, like, with a bunch of U's or something. Just look it up, you'll find it. And he's got influence, and especially Lou. Lou's got, like, this really loyal following that listens to everything that he says. And since Lou kind of put people onto this guy, they might be listening to what he says. I don't know. And so I just think that, from an experience standpoint, for me, I just found that, like, just selling all your shares of something that you've been holding or averaging down into all at once because you feel like it's boring or it's moving sideways or something just isn't, like, the best strategy. And I just wanted to kind of illustrate that here in this video. So hopefully I do a good job of that. And we'll get into the technicals and stuff, because also Lou and this guy, they're not technical guys. They don't focus on charts or anything like that. They seem to think that it's actually, like, stupid. But I will also point out, like, why I wouldn't have exited my position at this time. And maybe we can also, I'm thinking about how I might be able to add to this and then just hypothetically say, hey, what if he did sell it and it did keep going down and you continued to average down in your position? So these markers are, I don't know if I said this already because this is a second time recording. Simple, leave me alone. The markers signify the price every 2 weeks and the highest possible price you would have paid for AMC, okay? So you can see here that I have the different prices built in here, and then I plug them into this cost basis calculator that I found on investmentu.com. They're not sponsoring this video. I literally just randomly found them through a Google search, but you can do this yourself if you want. And if you would have bought at the highest possible price every other week and you even bought at the absolute top, $73, you would, if you bought 5 shares each week, that was what I did, right? 5 shares for every week. You would have 105 shares at a cost basis of $40.38, okay? I'm not calculating, like, what your losses were or anything like that. It's not really useful for this conversation anyway. What would be useful is calculating if you would have sold, because what my strategy would be, right? Okay, let me just tell you what my strategy would be. If I had been doing this, right, I'm averaging into this position, and I am continuously, it's going lower and lower and lower. I'm facing losses, right? I'm in the red on the position. Let's just assume that that's exactly what happened, right? I literally just bought five shares worth at the very top price every other week for however long it's been, right? And I go, you know what? I don't see this position growing. I don't see, like, maybe back here I thought AMC could go to $100 a share or $150 or something like that. But now I've changed my mind. I think that it's not ever gonna do that. And it's gonna either just be stagnant and I'll come back to it later, or it's just gonna continue to go down, right? So I'm just gonna unload all my shares. If I unloaded all my shares here, I would be selling them for $4,200. And well, I'm sorry. I'm sorry, if I unloaded them on the day that Blue Eye said that he wanted to unload here, would have been this Monday, so 2 days ago, at $15 a share. We can do the calculator here. 15 times 105. I would have gotten $1,575. Well, now, ironically, AMC has this gigantic, high volume, crazy rally that suddenly has happened. And if you would have sold it at its absolute peak today, just for example purposes, obviously you can see that instead you would have sold at $22 a share for your 105, right? $2,300. So you basically, what's the difference there, right? Like you're talking about like geez, dude, like 30, 20, well, whatever the gain is, right? I'm stupid. I'm sorry. He sold at the absolute top. Or, well, no, I didn't give him that. Sorry. He sold at $15, just for example. And you guys get the idea, okay? Like, don't. All right. You basically missed out on 42% gains. And in the best possible scenario, right? You missed out on 34% gains. So what would I do instead, right? Because it's easy to say now, oh, that was dumb. But remember, I was actually talking about this on Twitter and how it's not something that I would do. Instead, what I would do is I would continue to average down if I had to, right? So if it continued, I would continue buying, right? I would continue buying every week, essentially. And then whenever you have these price rallies, because that's kind of what organically happens in the market. Whenever something sells off, or it consolidates, eventually it does have price rallies outside of, and this isn't financial advice or anything, by the way, like I'm just totally telling you what my perspective is. And obviously something can just go to Bear Stearns and go to absolute zero, right? That's also completely possible. But generally speaking, when you see something that is getting beat up like this, it will at some point have these rallies, right? You have back here in February, you have a 42% rally. Back here in February again, you have a 30% rally. So for me, if I feel like the stock is stagnant or maybe it's going to go lower or something, I'm not going to sell in this like region. Like I'm just not going to, right? This thing has been consolidating and selling off for so long. I'm not going to sell. I'm definitely not going to sell in, let me get my rectangle tool. I'm definitely not going to sell down here. This is hell, right? This is the worst possible scenario. Again, this isn't financial advice. And I mean, you could say, oh yeah, but it's easy to say now. What if it would have went lower? Well, now, you would have done better selling here. Well, of course. But and that's easy to say, but you can't predict the future. What I would do instead is I would continue to buy. And as you continue to buy, what you're doing is you're lowering your cost basis as you go down, right? And then if you sell into these big price rallies like this, you're gonna have so much less loss. Your net loss is gonna be so much lower because your overall position is gonna gain so much on these big price rallies. And then also you don't have to worry about like having this fun. Like it's just in my opinion, it just seems like a very emotional kind of decision. Like, oh, it's boring, it's sideways, it just goes lower, so I'm just gonna get out of it and I'm gonna go buy whatever's pumping, this week, Mullen, Kodak. And I'm not trying to shit on anybody, by the way. I'm not trying to like disparage. I'm just saying like I remove emotion and I try to approach the market from a more scientific perspective. And actually, I would be averaging out of my position to the upside. If, I mean, I'm not selling my AMC, so don't hear what I'm not saying. But if I were in this situation, and this was any other stock, like it was Apple stock or whatever, instead, if I just said, oh, I just don't believe it anymore, I would be selling on rallies. And maybe even on big, ugly sell-off days, I might even be buying a little bit back in. so that then I can sell on the next rally up, and then I can slowly get some of my cost basis back, if that makes sense, right? So, and today's a perfect example, right? You missed out on 40%, 45% by selling on Monday, right? If you would have just held, you could have increased the amount of premium that you got out of that position so much more effectively. And then you could have averaged back down if you wanted to. And again, you can't predict the future. You can't predict when the pumps are going to happen. But that's why you kind of stick to the original strategy. You just go, okay, look, I'm just going to continue to average down. And then I'll just, on these pumps, I'll get my way out. I'll get my way out. And I'm not saying that you're going to end up profitable. You could end up profitable. But what I'm saying is you're going to mitigate your losses so much. And I think that that's just an important thing to be mindful of. All right. So, I know that took 10 minutes, and, I don't really do videos about that sort of strategy thing, but hopefully you gained something out of that. And if you stuck around, now we can talk about the technicals. What's going on with AMC? I bet a bunch of people are wondering what I'm thinking about it. Look, man, we all know. Look, we all know with this over here. Oh, I forgot I had my path tool on. This looks pretty familiar here, guys. Like, it's something that we've talked about on the channel a few times, right? Looks pretty accumulation-y, pretty, like there was gonna be this is a good time for a rally in reality. And so how would we have predicted this, right? I mean, obviously it's easy to look at the chart and say, yeah, of course it looks like accumulation now. Well, for months now we've been following the same pattern, and I'm not trying to be that guy or anything, but over that course of time, pretty much everybody in the community, because I've kind of just stuck to the same exact narrative that I've had the entire time, in that we are in this falling wedge. And let me, I recently adjusted it, and we'll talk about the adjustment of the falling wedge as well, to make it the least optimistic possible. Just so that, we're not putting our bias into the chart. We're not trying to sit here and make the chart say what we want it to say. So we have the top trend lines here, and we'll talk about what new resistance is going to come, but this tap up here, tap here. Now this is what was pressing us down, right? And then, so you came up here and you kind of did this spinning top thing, right? You kind of, on the shorter time frames, you would have seen a move like this. So you got resistance at that trend line that you had in this falling wedge that we've been watching for months now. And then you broke right through it, and you absolutely melted faces immediately, okay? So for people, this is a 42% move here. Again, for people who want to sit here and say technicals don't matter, technicals don't mean anything on the play, we have literally been following this pattern. If you've followed the channel, if you follow me on Twitter, this is the only pattern that we've been following for literally months. And like I said, it's been adjusted, right? We've had it appear like this. You had a false breakout occur here. You came back down, you retested, but you held this bottom line. And boy, did you ever hold it. I mean, this was the ultimate local buying opportunity as of now, right? If you bought here, you're up, you sold at the top, just for an example, 75% on shares, and that's not even options. So look, this is a bullish reversal pattern. This is what this pattern does, okay? And so for the people, again, I'm not trying to throw shade on anybody. I'm just saying, if you use technicals and you are patient enough and you make your cost basis better and better, like, hey, you were buying up here and you were wrong. You were wrong when you bought up here at $60, $70, whatever. You were wrong. You were wrong when you bought here at $30. When you probably thought you were pretty right after it went to $52, but you found out you were wrong again, and you were very wrong. But you don't, just because you were wrong doesn't mean that you cut your losses, in my opinion. Not financial advice, just my personal, the way that I view the market. You don't cut your losses at the local. I mean, you're within a few points of the local bottom for the stock. And if you had this chart and you knew what a falling wedge was, you would know, like, hey, this, I don't want to sell down here. This isn't the range that I want to sell in. Let's see how it reacts here. If it goes back down, I'll average up, and maybe I'll shed some shares here, right at this top line again, after I load a few more to make my cost basis better, and then I'll hold on to a few. And if we rally out of here, now is a good time if you really want to get out, right? If you really want to get out, to trim some and just see what happens next, right? And I'm not saying to do that. I'm just saying, like, in that example, if you are that person that wants to get out, like, I don't know, man. Like, this is the worst place as of now in months. I mean, it is the worst possible region of the chart to sell. And you see every time that it comes into this region, it wants to get out. It wants to get out of here. It doesn't like being in this range. So I don't know, man. Hopefully this doesn't come off as me being like dramatic or anything like that, but this channel, and when I look to bring to Twitter and YouTube and social media through this community, is the ability to empower yourself and be able to use be able to approach the market more strategically and not operate on numbers and emotion and anything like that, but rather be able to have a better understanding of what's going on a day-to-day basis in the price action in your investment, and be able to make this type of decisions that you need to in order to be a better investor and a better trader overall, right? So this is that video. This is what I was talking about on Twitter. This is what I was referring to. Again, I am not doing this for drama purposes or anything like that. And yes, it is very convenient for me that the thing didn't just fall off the face of the earth today. But again, this thing is squeezing up. We had a good reason to believe that there was going to be the percentage chances are in your favor that it's going to the upside when you're in a falling wedge. And I like to approach the market from a probability standpoint. And that doesn't mean that I'm going to be 100% right all the time, but I do prefer to be in a position of probability rather than emotion or just taking chances. Now, as far as further resistance, look, man, this is a sign of strength through and through, in my opinion. You have incredible volume on this move. This is the most volume on the daily chart that AMC has seen since August 24th, 2021. So this is a significant move. What do you have here? You have, let me see, count the volume count here. What did you do? 170 million volume. I mean, it's just a major move, guys. Like, this is a big deal. As far as resistances that are coming, like what's gonna be next? Let's see. I would say, probably the most significant thing that you're going to want to be watching is probably here from the 52 rejection. Yeah, like this, which is kind of creating that bull flag that everybody's been charting. Shout out to Jen Collado. I'm pretty sure I've seen Colin and Rico and everybody having this as a potential outcome here. We haven't followed this from a flag perspective because we've been following it from a wedge perspective, and I'm pretty sure that we're pretty much the only people doing it. And all my friends were like, dude, I don't know about the wedge, man. I know Colin was messing with the wedge for sure too, and probably Rico too. I haven't been on social media as much. I've talked about that in other videos, but anyway, I don't watch everybody else's videos. Sorry guys, if you watch to this point, I apologize, but yeah, I mean, in the broader community, I think people just kind of got tired of me talking about the wedge, if I'm being honest, which, by the way, this isn't the first time this happened. Everybody was tired of me talking about this wedge. And I don't specifically remember, but I am pretty damn sure that they were tired of me talking about this wedge back here. But man, this thing really loves wedges, and it really loves to get deep into that wedge and make you, go, is it a wedge? Is it really, but it is, man. That's what this stock does. And we've shown that time and time again. This is a much more macro thing here, guys. Like this is the biggest one yet. So yeah, you got this zone up here, which right now, like let's say that it just rocketed to it tomorrow, for example, it would go to like $29.50, which would be absolutely bonkers. I would probably, you guys know me, I would probably say, especially with this kind of exhaustive wick up here, that you're kind of more likely to see this sort of action come back down to maybe like this. Let's see what the fib is here. I'll tell you exactly what I think, rather than just kind of speculating. Yeah, somewhere around here, the 17, 16 kind of region. But we do have some historical precedent for AMC breaking out and not necessarily coming all the way back down to retest the wedge, although we also did come back down and retest this one here. So you just got to be on the lookout for that. A lot of traders, especially institutional traders, like to look for that confirmation off of the wedge before they want to re-enter a position. They want to see that hit the wedge, see a nice volume spike, and then a move back up. And then once you get here, then they're going to kind of pile in, and you'll see kind of a lot more volume come out of here. But as of right now, you have a strong break, guys. Really strong volume on this move. Let's get a little bit more granular. Look at the volume here. Yeah, I mean, the buyers are here, man. Like they bought these shit. They bought these shit out of the stock here. Let's see, a shorter time frame here. I mean, you look, it's pretty healthy. Pretty healthy move. It's not too aggressive to the upside. You're not really getting rejected down. Like, if it's not really wedging like you see a lot of times on these moves that eventually close up. And look, it's not going to go up forever, right? So it will eventually wedge up. You're going to see these highs get a little bit weaker at a time, and you're going to see a move down. And that could happen way up here. It could happen anywhere, right? So but like we said before, the thing that we had been watching for was the break of this wedge. You broke this key resistance range here, which we'll say is the top was at $21 here. And then obviously you could see maybe down here to $18.78. There is a possibility that you just go here and then you just bounce right off like that. If you break higher high here, right? You break this now, this $23-ish kind of zone. We'll throw another horizontal here. Let's say here, right? If you break this, we'll put it right there, 22. Yeah, you break this previous support, you break it as resistance, you can get pretty explosive here, guys. Like you can really come up, get into this 2750 range, and then see how you react there. If you break this resistance line up here, like if you break it and you retest, guys, like this is when you get into that range of like, okay, you can really get this, really get going. That's really what you're looking for. For people, I get these questions all the time, it's like, when moon, Dave, because I'm kind of the local, like, non-hype man kind of guy, Moon is, you break this large downtrend that has held the stock down, it's beaten down the stock. Once you break there, this thing sent the stock to hell. If you break it and then you hold it as support, basically bears are just gonna get out. Like they're just gonna be, like, look, I tried to short it here. You had this initial break. I tried to short it here, and then it created a new high out over this. Like, it's over. There's not a bear. There's not a short that's gonna just hold through that 33.50. It's just too painful, and it's just stupid. It's just not a good idea. Like, you would just go, okay, I'm gonna close and look for a better entry. Like, I'm not gonna sit here and just let my account get burnt to hell when this thing comes back up to test $50 again. Like, that's stupid. I'll re-enter at 50 and then see what happens, right? Like that's just kind of the logic there, right? So that's kind of your moonshot where things get really stupid when that happens. So yeah, that's pretty much the video. Hopefully you enjoyed this video. Hopefully you gained something from it. I know I'm probably gonna get some shit or whatever. People are gonna be like, why are you trying to cause drama? Because people can't just like understand that I can disagree with another adult and we can have a disagreement. about strategy, and it's okay. It's not me shitting on them. It's just my personal perspective and how I would go about things. So hopefully you guys understand that that's kind of where I'm coming from with it. I know that I'm not perfect, and I probably did sound kind of condescending or something like that at some point in this video, but I really didn't mean to. But yeah, so hopefully you enjoyed. I said that about 50 times this video, so I'm gonna really shut up now. And I'll catch you guys on the flippity flop, the drippity drop, the blippity blop. You know? What's a good song that we can sing here at the end? Oh, dude. And I don't want the world to see me, 'cause I don't think that they'd understand. When everything's meant to be broken, I just want you to know who I am. All right. And I don't want the world to see me.